Hi, I'm Keith McCullough. Welcome back. I'm here with Todd Jordan, who's a senior partner and one of the founders of the firm who runs our gaming group. And today I really wanted to dig in and expand upon at the same time a point that I was making with Howard Penny yesterday, that restaurant sales in America just fell off a cliff. So Todd, let's just kind of get into that with your group. Specifically, Todd obviously covers all the regional gaming companies, Vegas, he actually covers all the international ones too. But Todd, what's going on locally in the U.S. gaming business?
Yeah, U.S. gaming regionally is under some pressure, and it's been for a while. You can see from the chart that we put up on the screen, we've got some December numbers in already, because each state has to issue gaming revenues every single month.
These are public
data, right?
Okay.
So we've had 4 so far that have issued numbers, and they're all down big. And you can see it from the chart. You're seeing a big deceleration or acceleration of negative growth here in December, which we actually called, because it's really the straight math. When you look at the sequential trends and when you factor in the comps, that December would be a bad month, but it's actually coming in worse than we thought.
But you have to actually, with your team, model this yourself. You get the public information, then you have to discern whether it's just kind of a head fake or an actual trend.
Right, and we have a pretty quantitative approach to modeling monthly gaming revenues, because it does drive sentiment. You know, you can go from a negative 5% comp to a negative 10, and the stocks will get creamed, and that's what we're starting to see here in December.
And when Todd says comp, he means comparative sales. So same store sale, what you see in this chart, which in other words is what the company's doing, comparatively speaking, to the prior year. So in other words, this is a certified disaster. Now, that disaster, Todd, within the context of what we like to dig into, is it secular or cyclical?
Right. Now, if you look at the next chart, it's absolutely secular. Right? We've had not a great economy, but a better economy. But look at these numbers here on the next slide. You've got, if this is a trailing 12-month, the bars are trailing 12-month gaming revenues domestically, and they're straight down, right? The year-over-year change is indicated in red, and it's negative. And you can see the big dip here in December. It's absolutely secular. The issue is that really, it's really on the slot side, where in the regional markets, 90% of their revenues are actually derived from the slot machines. And young people are not playing slot machines.
Well, and that's one secular issue. Again, something that probably won't change. It's a demographic secular issue. This would probably surprise a lot of people. Do you think it surprises the companies?
I think it does surprise the companies, because you would expect to see, now when we had the downturn, right, in 08 and 09, that was clearly macro. And a lot of it was housing driven, and we've been talking for 5 years that housing prices are the #1 driver of gaming revenues. So you'd expect, with housing declining and now coming back, you'd expect better gaming revenues.
Exactly.
Right? Yeah. That would be the cyclical argument. It's not happening. So there is a real deep secular problem here.
I mean, to be clear, I mean, home prices are up double digits year over year. So that's one of your big leading indicators. The economy's better. Consumer. This is what I was saying to Howard Penny yesterday. Like, what gives? Is Keith and Todd now making this up? Like, who's making it? Nobody's making this up.
Yeah.
So the companies are going to have to effectively react to this, and what, in the upcoming earnings season?
Yeah, I think what you're going to see is another quarter of disappointing earnings. We had it in the third quarter. Now, these stocks have done great. You know, don't get me wrong, but it's been a real estate kind of play here that's driven these stocks higher. It hasn't been the fundamental business, but the stocks did react very negatively to the third quarter earnings. We think the earnings are coming down again for the fourth quarter. They'll be reporting end of January, early February. And then numbers are going to have to come down again for 2014. But people have to realize that this is a long-term secular problem. It's not like 25-year-olds are all of a sudden going to start playing slot machines. It's not happening. You know, I don't play slot machines, and I'm 40 plus.
People wouldn't guess. You wouldn't guess Todd Jordan's age. You can't release that kind of information. There's some people on Twitter that'll do some dangerous things with that information.
Well, you told me to grow a beard to show how old I am. That's where it comes through.
Well, just looking at this next chart, I mean, Todd's not kidding. I mean, look at the outperformance. This is Pinnacle. Pinnacle's a regional company. Why don't you go through that? The outperformance of this stock has been impressive.
Yeah, and again, it's purely a real estate play. We had Penn National split into a REIT, Real Estate Investment Trust, and an operating company.
Penn is P-E-N-N.
And GLPI is the REIT part of the company. So Pinnacle, everybody thinks that eventually they're going to split into this part REIT, part operating company, which is actually a value-added transaction. But Pinnacle has so much leverage that they can't do this for a few years, right? But nevertheless, investors have bid up all of these regional gaming stocks in the face of bad fundamentals because of this real estate play. We think that it's played out now. Now we think the focus is going to go back onto, what are the fundamentals doing?
Well, it's interesting because the fundamentals, if you look at a shorter-term chart, which we'll show you right now, we show the 3-month chart with the Hedgeye quantitative overlay, and what you'll see here, and this is what Todd and I talk about on the desk. On the desk being like Todd sits on the desk next to me. that's where our team sits. And we talk about these things. So my job to Todd is to basically say, yeah, it just broke its trade line. And that's what you can see here. The immediate term trade line of support is now resistance for Pinnacle at 25.54. So that's that dotted line that you can see there. So do you think that this is it at this point? Because this thing's had head fakes. Suffice to say, like they've missed numbers. Right. This isn't going to be the first time. Do you think that this could be it for Pinnacle in terms of people having to give it up?
Yeah, I think it could be. And I think the stock action we're seeing just recently, where it's starting to roll, is people understanding with some of the numbers coming out from the states that there's a bit of a problem. Houston, we have a problem, but we haven't had the big states come out yet, and that'll be over the next week or two. So I think that's why you're going to see this rollover continue here, and then I think you're going to probably have a revaluation of the company down. It's not going to be back to 6 times where it was 2 years ago, like 6 times EBITDA.
Yeah, 6 times. But now it's at 8.5 to 9 times.
8.5, 9, all-time high.
All-time high in valuation. So again, much like the call with Penny, I have a veteran here who's analyzed the space for a long period of time where the stocks are trading at peak multiples, they have a secular headwind developing, and they're starting to miss the sales line. Now, if you don't know what to do with that, you're going to know soon. At this point, I don't think the shareholders of Pinnacle specifically, or even Penn, are going to be very happy about this. So we just wanted to kind of flash a light on that with the senior guy who knows what he's doing. I'm at Keith McCullough. You can find our ace, Todd Jordan, at Hedgeye Snake Eye. That's his Twitter handle as well.